Good afternoon, this is Tom Aspray with the Viper Report. It's Sunday, July 5th. Hope all of you have had a great 4th of July weekend, considering the conditions, and you're all rested for the week ahead. Yesterday I put out an article on Forbes.com, Investors Bearish as the Stock Market Soars. It has been one of my more popular articles recently with over 55,000 views. This chart is from the article. In it I show we have the S&P 500 on the top. Below here we have the AAII bullish percent, which dropped down to 22% last week. That's at levels that are normally seen at a market bottom. Now, as has been pointed out for a number of months, it never really got to low levels in March, but now has. Below this we have the bearish percentage, which is pretty high at over 45%. You can see that in late December and also in early February of 2019 it was at very low levels. So this suggests that the market does have more room on the upside. Of course, there are a bunch of caveats. We have more economic data next week, which is not likely to get better, and of course we have the potential of worse news on the virus over the long weekend. This makes it imperative that you pick your entry points and stops quite closely. It has been easier to find good stock buying opportunities than in the major averages. Many days the S&P or the SPY or the Qs opened sharply higher, not allowing a good risk-reward entry, while in stocks there have been some much better opportunities. This is a copy of the June 22nd Viper Hot Stocks report. For those of you who have not seen it, that's what it looks like. Every Monday there's a table like this. You can see the first symbol in the buy list is Amgen, AMGN. This was the commentary that we put on Monday, and we're recommending it. The stock had closed at 238.70. As is typical in my style, we're looking to buy it at 234.18 and at 231.06, with a stop at 221.77, a risk of 4.7%. This is a current chart of Amgen. We were looking to buy this dip, which we got down to a low of 229.98. So both of our long orders were filled. It closed sharply higher on Wednesday, and we told clients to sell half at 261.44 or better. We got really lucky on Thursday. It hit a high of 261.46, taking off half the position for a 12% profit. Now we'll raise the stop in the remaining position to lock in an overall profit, but the breakout on Amgen suggests it will go higher. You can see the volume was very strong. The daily and the weekly indicators do point higher for Amgen. In Monday's report, I have several new buy recommendations for traders, as there were a number of good looking charts to select from. It was also a solid week for the healthcare ETFs. This is XLV. We've been long it for a while, and we added to positions in the last week or so. We're looking for a breakout above this recent high here, 103.78 to 104.13. That looks like it's a little more likely. OBV is strong. Relative performance is not. So it still needs to prove itself. You can see the new monthly pivot for XLV is 99.62, which is good support. There are a couple other healthcare positions we have in both biotech and in pharmaceuticals. I hope all of you had the opportunity to read an article I posted a couple weeks ago, June 24th, Finding Entry and Exit Points for Sector ETFs. In that article, there is a table that gives you the yearly pivots and pivot support and resistance for all 11 sector ETFs. A couple of these closed last week back above their yearly pivots. So as I mentioned in the article, print this thing out. I think you'll find it useful. If you want specific buy and sell advice next week, hope you'll give the Viper ETF or the Viper Hot Stocks report a try. You get at least 2 reports a week, plus interim weekly updates. And of course, when things are volatile, I have special market updates and let you know via Twitter or Stock Twits when they are available. So hope you're all rested up for the week ahead, and I'll try to update you by next weekend. Thank you very much.